Hello, this is Solomon Davis, Right Side Trader. Today is December 24th, 2024, and this is a quick trade review. This is how I kind of do the Christmas trade. I've done it similar to this in the past and all, but again, this is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor, please check with your significant other, and make sure trading is something that is suitable for you. Okay. All right, and again, just because this happened worked out this way this year doesn't mean it's going to happen this way again next year. What I'm actually going to be looking at is DIA. I've traded it here a couple of times this week already. Anything is, I was just trying to verify, will this Christmas rally, and I trade when I trade do the Christmas rally trade. I usually do it with the Qs. I think I might have when I first started out trading, I would do it with the SPY because that's what they was talking about, the SPY. But then I started doing it with my Qs, and I call it my Qs and stuff. And then this year, the Dow was giving me a setup that I want to verify. Okay, can it work with the Dow? And I'm gonna just go over the whole chart setup and how I was looking at that. So let me just go ahead and minimize this, and let's take a look at the charts. And what I'm going to be looking at is 4 different time frames. I'm looking at an hour time frame, a 30-minute time frame, a 15-minute time frame, and a 5-minute time frame. When I'm looking, this is how I kind of do it. A lot of times, this is not exactly how I do it. The 5-minute time frame, again, if you guys been watching me for a while, you know that's my main time frame that I like using for my confirmation, my entry, and everything. That's what I look at. But again, I do have multiple time frames up to make sure everything is looking okay. The higher time frame is kind of like the confirmation and make sure I'm verifying that the trend is my friend based on the direction of the trade that I'm actually looking at. Again, it gets back here to this that lower time frame, lower than that, this 30-minute time frame. It's just to make sure that okay, we are bullish. Are we bullish or bearish? And then this time frame here, it kind of helps me with that entry and all when we get to the 15-minute time frame, and down on the 5-minute time frame is my entry chart and all. It's the way it actually really goes. I'm gonna zoom in on each one of these right quick where we can just take a quick look at it, and then I'll jump over to the actual trade where you can actually see that. And as you can see, I actually got into this trade yesterday. That was on the 23rd, and what I was been expecting on the Dow, I traded it on Friday. I was expecting this pop, and I got this pop. So I was expecting a continuation of what had happened here. But that was yesterday morning, I ended up getting into the trade a little bit earlier than what I should have, but I was waiting and being patient and looking at my other time frames and seeing everything was okay. Went through my whole panic rule and to say, okay, should I still be in this trade? And then I saw, okay, yeah, it's going up So that's what I saw. I was able to see here on my higher time frame that, okay, I'm still on the right side of the market. I still got to break this high again, for the whole Christmas rally, I do expect it to break this high and go higher. I don't know if it's going to actually break that high. Let's go down to the next time frame here, the 30-minute time frame. And on the 30-minute time frame, that was the Friday. This is the day I actually entered. The day I actually entered, I could see, and this is the time frame where I'm saying, are we bullish, are we bearish? And I could see we were kind of bearish in the morning and I wanted to really be in this thing. And I ended up jumping in it too quick and It ended up dropping against me, but then I saw my doji, I saw my red candle, it didn't go quite as low as that previous low. Then I saw my bearish pattern. Then we got back where we were bullish. Okay, I'm good. So that's the way I look at it. This was a trade that I was expecting to carry until Thursday or Friday when the market opened after Christmas and expecting a pop. That was the whole plan. But let's go down to the next time frame here and take a quick look at this and here. And on the next time frame on that day, if we take a closer look at this is what was happening. I saw this on the lower time frames. I could see that it was dropping. It made a bottom. Then it didn't make a bottom quite as low, and it kind of double bottomed here. So again, that kind of gave me, everything is okay, even if I did have a bad entry getting in way up here and stuff. It's one of those things. Again, the plan again. It's just like any long-term trade. You're not going to nail that entry, but you're planning on like a long-term trade. You're planning on holding that thing for weeks, for quarters, for years. In a day trade, and this was a swing trade, I knew my plan wasn't to get out of it that day anyway. It was to get out it after Christmas and all. but I ended up getting out of it before Christmas. And that's a lot of times how my Christmas trades work, especially if you're using options and short-term options. Whenever you, I always say, whenever you see your profit, you better take your profit. Even though you could get more profit, but me, since I'm an intraday type trader, I can trade it again that next day if I really want to, if I want to trade it again. So this is what I saw here. I saw this double bottom. I saw this taking off. So again, I also saw another bullish looking pattern. If we look at this, this is the double bottom area. You had a bottom and you had another bottom, double bottom. And then on the second bottom, you had a bullish pattern, a bullish engulfing pattern. And then after that, you got your confirmation, and it was off to the races. And that was it. That's what I saw there on that 15-minute time frame. But let's go take a quick look at it on the lower time frame and see what we see there. And you can see on that entry time frame, and you see how it was developing there. So let's go down here to this entry. Let's have to go back here to this day, guys, and I'm going to slide it over just a little bit to here. And on this chart here, I have the VWAP lines and stuff. This line is that VWAP line. This line is just 2 standard deviation line that they have on the Thinkorswim platform, and this is the 2 standard deviation above. One of the things I notice about this thing, it'll get where it goes along these 2 standard deviation lines, then pull back to your middle line. It's kind of like your mean line or your VWAP line. And then at times it'll go up here to this top line and hang out along that and go higher at all. So on this day, again, this is yesterday. This is the 23rd, and in the virtual account, I knew I wanted to be in there, so I kind of jumped in right away. And for me, as a trader, one of the things I do, I like in my virtual account, I do something crazy, and I keep my other accounts closed until things I settle down. That's the whole thing, because I know I shouldn't be in the market and a lot of times wait until after 10 o'clock, before I actually jump into the market and stuff. Or sometimes I'll see if I'm actually, it's all based on what's going on that particular day, how I decide how I'm going to trade and based on what I'm seeing in the morning. So this particular morning, I didn't like what I was seeing. It was actually trending down, as we saw on that higher time frame. It was a little bearish. So again, but I wanted to keep my eye on it. I didn't want to get where I got distracted with anything else. I just wanted to be patient enough and wait until I saw that entry. And what happened here, as we can see here on this 5-minute time frame, we started trending along this 2 standard deviation line to the bottom. We got a pull off at this time. So this was the first time right here to actually take an entry on this thing the other day. And then the next time we ended up, you would have been able to see this. It came up here and gave you another pull back down. It gave you a double bottom. Bottom. That was it. Then you had a bullish engulfing with these candles here. You had a little pullback. This a lot of time is your entry candle at a 50% point, and with your stop being down here at these bottoms and all. So that was actually the trade, the real trade. That's where your entries should have been at and all. So and you can see that you had plenty of time to catch that. If you're the type of trader, let's say you like trading off the VWAP. If you like trading off the VWAP, you may not have gotten into this trade until it crossed this line, this line right here, and you would have got in on that candle. All based on your trading style, your trading plan, and your trading strategies that you have. And it still would have worked out, as you will see. You just would have had a higher entry, $1 higher. But again, it would have worked out. So that was the entry. And now the thing was, did this trade stay good for the rest of the day? Based on, because again, I was looking to hold it for the rest of the day. I was actually thinking I was going to be trading it, holding it over Christmas. And as you can see, for the rest of the day, it was good. At the end of the day, it was good. And now the thing is, okay, I'm expecting I knew Thursday, well, I keep saying Thursday, Tuesday was going to actually be a half a day and I didn't know how this thing was going to play out. So let's go here to the next day. Zoom, 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 zoom right on over and all. And boom, this morning I really wasn't in front of the computer and stuff. I really wasn't too. I was thinking that maybe I wasn't even thinking about getting out of this trade again this morning. This morning I went for a bike ride and all, and then when I came from my bike ride, I saw the trade was actually up and all. And again, with me with options, when I see profit, I like taking profit. And what time did was around this time? Let me move forward. Boom, 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 boom. It was right around this time right here. It had made this top, and boom. That's not me closing my trade, but I closed my trade around that time at all. And boom, it was a big sell-off right there. And that was the time, about the time that I actually no, it's not the time that I actually got out of my trade, but this is the time that you should have been getting out of your trade. But that's it. That's and the reversal trade was actually closed at that time, and I'll show you that. But that was pretty much the setup, and that's what you see. This that other thing, like I had said before, on the other side, we can see that it was trending on this line right here, and it had got a little bit extended, and let's see how it played out. But I knew it was a short day. It did go back up there. It finally got to, this is my H2 level and it bounced off that. And it finally broke that. And this was the end of the day, where it started going sideways. This is a level that I expect the market to go up to, and then usually for the rest of the day, I usually hang out at this level here anyway. But let me go ahead and show you the virtual trade, how it played out and stuff. And let me switch screens, share, and share it is, apply, and you should be looking at the option chart. Again, like I said, on the 23rd was actually when I entered. Bad entry, bad entry, bad entry. But again, for me, this was more of a marker, more so than anything, to let me know that I actually want to be in that trade. And this is it right here. This is the actual entry, time placed. It doesn't show you field time on this particular thing, but it was filled pretty soon and all. So that's when and again, usually right after, I notice the time place, because I usually place my close order right afterwards, because I expect it to be a quick scalp and all. And on that particular day, it wasn't a quick scalp. I was expecting to get out around 360, and it never reached there. The closing trade actually expired. And as you can see, though, come today at 11:45, I looked at it, and it was time to get out of that trade. Had made 80 cents on that trade. That was good enough. No need to get greedy and carry it over Christmas with the theta decay on a short-term option. Just close your trade, take your money, and be done with it. And that's pretty much was the trade. That's all I really want to share to at this time. This is Solomon, Right Side Trader. Hope this is being helpful, kind of giving you an insight of what can happen on some of these trades and how they actually play out and all. And that's pretty much it. Hope everyone have a Merry Christmas, and I'll talk to you probably one more time before the end of the year. This is Solomon, Right Side Trader. Have a good one. Merry Christmas to all. Bye.